Dan Celia.
I want to be a nation that is on the biblical principles and the values and the ethics that are found in Scripture.
Your personal economy.
Financial issues that you need to know.
Aligning reality with truth.
Well, I think it's time we ask ourselves if we still know the freedoms that were intended for us by the founding fathers.
Now, here's your host, Dan Celia.
Good morning. Welcome back to Financial Issues. I'm Dan Celia. It's great to be here. Welcome to all of you on the NRB TV network and other radio networks that join us here for the second hour. We sure do appreciate it. We're live today. I've had a little vacation, so I'm grateful for that. I feel rested. We are taking phone calls, obviously a lot of penned up phone calls. People want to get their call in, so we are going to continue on the phones. But I sure appreciate you being with us. I hope the last few days have been edifying to you on the program. I'm sure they have been. I hope so. But we are live today, and we're going to continue to take calls. And, of course, tomorrow is Rapid Fire Friday, so that will be a good thing. Let's go through some economic data, something we haven't done in a while. We'll do that. Of course, we've got Empire manufacturing data come out, and it's very interesting. I want to look at some of these manufacturing things because I've got a point to make in reference to this manufacturing. So one thing that should be of interest to many of us is manufacturing around the globe. We are finishing up right now earnings season, right, for second quarter. So second quarter earnings season complete. Worst sales in 7 years. Forget about earnings. How many times have you heard me say in the last 3 years, nobody is looking at sales. No one is looking at revenues. Forget earnings. Earnings and revenues are two different things. Earnings can be generated by a lot of financial engineering that has been going on, and that's been wonderful for the bottom lines of companies. But the fact of the matter is, it sheds a very unrealistic picture of the economy here in the U.S. You've got to be looking at sales. Well, finally, everybody's starting to look at it. I've been talking about it for 3 years. Sales numbers down, same store sales, traffic. You've heard me talk about traffic in stores. The idea of business investment. How many, 9 out of the last 11 months, there's only been really one good month in the last 11 in business investment. That is businesses spending money on itself to grow. We see investment in industry, manufacturing down, productivity down, sales down. Not a good thing. Empire Manufacturing. This is the New York Fed's manufacturing region. Tomorrow we get Philly Fed, and so between the Empire Fed and the Philly Fed, we cover an awful lot of manufacturing sector of the United States of America. The Empire Manufacturing number, they were expecting it to be 5.0. That's what they were expecting. They got a negative 14.9. It's a 20-point miss. 20-point miss. Now, I think we're, more and more starting to believe that if they set the expectation and they say it's going to be something like that, then hopefully it will be. Doesn't work that way for all the economists that are coming up with these numbers that have been wrong for the last 6 years. A negative 14.9. Core CPI, Consumer Price Index, down 1/10 of 1%. That's basically zero. No inflation. Well, that's not good because there's no incentive for employers to give anybody a raise. Certainly you folks on fixed income, pension funds, Social Security aren't going to see any bump next year for your cost of living expenses. Crude oil inventories down up 2.6 million barrels. Oil industry, energy still struggling. Crude oil sliding below 41, getting close to that point now, but crude oil prices continue to be down. That is likely to be, we're at 40.84 right now. We are positive. We were at 40.94 when we opened the program. We're at 40.84, so it's headed back down again. Brent crude oil down 0.75% to 46.82. Gold is up. That's one bright spot. Gold is at 11.47, which isn't so bright, by the way. It's not even over 1,200. Silver's at 15.52. The agricultural commodities, we've got the big mover is in wheat, and that's up 1.1%, but we've lost an enormous amount of market share overseas in the wheat market. The soft commodities have done okay, but the hard commodities, the metals and oil and such, are really getting clobbered. So far this year, investors have pulled out $79 billion out of equity funds. That's the outflows to the market. Some of it going to gold, some of it going into bonds, a lot of it going into money market accounts. The yuan is the Chinese currency. Now, we know what's going on in China, right? We see this downgrade, and I want to bring this point up. I talked about it in the first hour. But the IMF looks like it is moving and did move or will move to not upgrade the currency of China to reserve currency status. They're not going to upgrade it. They're going to have to wait another year to see if that happens. There's two reasons why I bring that up. The first reason is, the communist regime, because all the central banks knew that the IMF was coming out with a ruling on the reserve currency. Now, so the government, the communist regime, knew this. Yet they still moved to downgrade their own currency. They still moved to manipulate their currency downward. Now, it is very important to them that they would get this reserve currency status. But the move, as far as deflating their currency goes, had to be a desperate move that they couldn't wait another month or two for this ruling to come out. And it goes to say that this communist regime number of a 7% growth rate in China is lunacy. It's not going to be anywhere near that. As a matter of fact, it's not likely to be anywhere near Citibank put a 5% growth rate. It's not going to be near that either, but we'll never know because it's a communist regime. But here's how we will know. We will know by the impact that it is having on other developed nations, including the United States of America. This is not good for the global economy. So they knew this was coming out. They did it anyway in a desperate attempt to try to move their markets and their economy in a much more positive way. Not likely to happen. We're seeing Swiss exports fall again. Chemicals, pharmaceuticals, machinery, watches, all down in the Swiss markets. Germany's producer prices flat, nothing, zero. They're not moving either. They fell 1.3% year over year. That is not good. London stock market, 3-year low. U.S. industrial production. That came out late last week. Everybody was singing, rejoicing over industrial production in the U.S. Let me just remind everybody. U.S. production stands 2.1% below the average production rate since 1972. 2%, not 0.2, 2.1% below that. We just love the 1970s. Labor participation rate, 1977, it would only stand to reason that our production rate would be well below the average since 1972. We don't have any people working. That could have something to do with it. We've got this global economy downturn, uncertainty, bumpy at best. We got a stronger U.S. dollar. We've got a slowdown in oil and natural gas industries. And factories are holding back for the last 11 months, or 12 months now, last 12 months, holding back any kind of expansions. Why? Because businesses, consumers, manufacturing, small businesses, large multinational businesses, and consumers are not spending any money. They either don't have the money to spend or they're hoarding it because they believe the worst is yet to come. We seem to have difficulty wrapping our arms around that. Look, if people around the globe are full of uncertainty, concern, and fear, maybe it's a fear about where their next dollar is coming from. Maybe it's a fear about being able to keep their job. Maybe it's a fear of higher taxes. Maybe it's a fear of higher health insurance costs. Maybe it's a fear of higher health costs in general. Maybe it's a fear of still not being able to find a job. Maybe it's a fear of staying in the rut of working 2 part-time jobs. Maybe it's a fear of slipping into poverty. Whatever the fears are globally, it's equating to no industrial production, which is increasing oil supplies and lowering demand from an industrial sector when you have an oil industry that is demanding this kind of demand. Now, having said all that, I want to rest some fears that everybody has about their oil stocks. Look, there is somewhat of a flight right now into big oil, as I think there should be. ExxonMobil, ConocoPhillips, Chevron, Phillips, Royal Dutch Shell, some of the large companies. People are going into those now. These are people that have 10 years. They have a long-term time horizon. Not short-term. You can't go into these stocks and say, well, in 6 months, I lost 30%. What am I going to do? You got to first explain to me what part of 8 to 10 years you don't understand before you raise that question. These are long-term positions, and we're seeing people move into these because of how inexpensive these stocks are. Are they going to get lower? I think they are. I think there's still some downside potential, but rather than waiting for a bottom, start weaning in. It might not be a bad idea, but more importantly, what I want to express is not to panic. You're going to have to trust me that if you own those companies that I just mentioned, you're going to be fine. If you own them with the idea of it's 8 to 10 years, you're going to be fine. You're not going to have any real issues with them. Folks, we need to take some comfort in the cash positions that we have. We should, if you've listened to this program or you're a partner with me on the website, and you have been for any length of a time, you have large cash positions. Some of you 50, 60, 75%. Some of you more. But you're going to be fine with that. But we have some turmoil ahead of us. And that's why we listen to the program. 866-300-9298. You're listening to Financial Issues. I'm Dan Celia. It is great to be here. We're going to get to phones. 866-300-9298. We'll be right back.
We're we're in the financial business. We manage a couple of trusts and some estates, and of course our own monies too.
Courtney Trotter talks about the charitable gift annuity from the AFA Foundation.
I understand annuities about as much as anyone, I guess, can. So I just felt that charitable gift annuity was a win-win situation for many people that still are generating income and still have assets, because you never know when you may have to draw down on something like that. And if you don't ever have to, then it's even a better gift to give to a really good foundation like AFA. A very solid investment, a good way to help do the Lord's work, and it's there to help us as well.
Find out if the charitable gift annuity can work for you by calling the AFA Foundation at 800-326-4543, extension 345.
The opening statement in the Constitution of the United States says this, that we, the people of the United States, in order to form a more perfect union, establish justice, ensure domestic tranquility, provide for the common defense, promote the general welfare, and secure the blessings of liberty. I don't know what part of that we don't get anymore. That was written by men who cared about this country deeply.
Financial Issues with Dan Celia.
Welcome back to Financial Issues. I'm Dan Celia. It's great to be here. 866-392-98. We are live today, so you can make your phone calls. Tomorrow, of course, Rapid Fire Friday. We'll get through as many calls as we can. But we are going to go to phones, see if we can get some of the callers that have been waiting a couple days to get in. Let me go to Johnny. Johnny calling us from Texas. Hey, Johnny. Let me go to... There's a line open if you want to call in. Let me go to Mark in Virginia. Hey, Mark.
Good morning, Dan. Welcome back.
Thank you.
Just wanted to call and ask your opinion on, my wife and I happen to be partners with you, and we are slowly building up our allocations, but aren't very heavily invested very much in any position quite yet. Mm-hmm. But we do have a position in Huntsman Corporation.
Okay.
We're right now about 65% in cash. I've got about a 1.5% allocation in Huntsman right now, which is down 26%.
Right.
I didn't know if this would be a good time to add to that, or do you think there's still more room for it to go down and we should hold on, or what would your opinion be?
Yeah, I think you probably should add to it here. I wouldn't, let's say you want to add, whatever you want to add, you might want to cut it in half, add to it here. See if it comes down a little bit. This is one of those very, very confusing stocks to me. I like Huntsman, very strong company, chemical company, organic chemical company. They do very, very well. But Huntsman, most chemical companies generally increase bottom line, which I'm sure Huntsman is, along with everybody else, bottom line due to lower oil prices. The vast majority of chemical companies are extremely dependent upon fossil fuels to do whatever it is they do, the manufacturing. Most chemical companies use an enormous amount of energy. So when oil prices go down, it's generally a good thing, kind of like refineries. When oil prices go down, refineries generally do pretty well, or they should, because they're obviously paying a lot less for the raw material and the margins go up. Chemical companies aren't a whole lot different than that. I like the company. It's a very strong company. I like what they do. I would not have a problem. I added to Huntsman in some of my private accounts probably a month ago. So, and it's going down since. I'll add it again. I'll add to it again, maybe at these levels or somewhere close to these levels. So, yeah, I wouldn't have a problem adding to it.
With knowing that our position's only about 1.5% of our assets, would you go as much as doubling our position right now at this price? Since we're down 26%, or would you do less than that? Yeah,
no, I would double it. I know, if you've got 10 years to retirement, I wouldn't have a problem doubling your position. And if you don't do it now, then you don't want to do that now, then do 3/4 and, or half and do the other half, if it takes another tick downward.
Gotcha. Okay, well, I appreciate your advice, and like I said, welcome back from vacation. Glad you got some rest.
Thank you, Mark. I appreciate that. Let me go to Mary Ann. Mary Ann calling us from Ohio. Hi, Mary Ann.
Hi, Dan. I'm so glad I could be with you.
Thank you.
I am a 75-year-old widow. My total assets are my home, 16 acres of agricultural land, which will soon close and sale. I live on a teacher retirement check directly deposited monthly into a Chase checking account. I really wish that this Ohio State teachers could transfer this deposit into a biblically responsible banking institution. If you don't know of one, would you have a preference between Huntington and PNC? Well, you can come on that later. But also, how can I best secure about half this deposit for the future? I have not been doing that. And then I have another question in regards to the land sale, and I'm not sure how fast I should go because there was one I can't ask you too much. So my personal proceeds will be of the land sale will be about $13,000, and I would like to convert this to cash and secure for emergencies to come, and then gift each of my 2 children with the balance left from the closing costs and my tithe and protected taxes. They both have significant mortgages, debts, children, one with 2 and the other 3. And boy, I would appreciate any thoughts you would have concerning these intents of mine, and I don't know what you could say.
Mary Ann, I would secure the $13,000 into your emergency savings. I think that's a great idea. I would like to see you do that. As far as gifting to the children, I think that's a wonderful thing to do. It gets it out of your estate. You can gift up to $15,000 to anybody. So if you wanted to gift more than that, I would suggest that you write 2 separate checks, one to your child and one to their spouse, to be able to get more to them. But you can gift up to $14,000 to one person, and I would do that. I mean, I think that's a wonderful idea. I would probably go to Huntington. I like PNC. PNC is a great bank. I don't think Huntington's going to be around much longer in the sense that I think they're a prime candidate to get bought out. Hopefully they'll get bought out by one of the good buyers, BB&T, one of them, one bank that is buying up a lot of the other smaller banks. They are biblically responsible. So I would suggest that. As far as securing half of that retirement, let me ask you real quickly, how is your emergency savings? Is your emergency savings going to be pretty much just this $13,000?
Yes, I have 0 savings. I have not. I just live paycheck to paycheck.
Okay, so I would like to see you build upon that, Mary Ann. So I would like to see you increase in any way you can that emergency savings. So if you start out with this $13,000, I would like to see you build upon that if you can. And I think that would be a great thing to do for a little while. And if you do that for the next year or so, then at some point in time, you're going to want to shift some of it into an investment of some point in time. I don't know what that would be, but maybe something conservative, maybe a Timothy Conservative Growth Fund or something like that might be a good idea. But I would wait. Let's wait and see once you build up that savings. But I think your focus ought to be trying to grow that savings as much as you possibly can.
Okay, and where should I put those monies?
Well, so if that
just keep them at home.
No.
And put them at home. Maybe buy some Swiss coins.
No. I think that you should have some at home. I would be okay with a little bit of that, a couple $1,000 tops at home. That would be fine. I wouldn't do any coins or anything. I would just put the rest in a money market savings account or even a CD at the bank for now. And that's how I would save that. I wouldn't bring it all at home, but it's good to have some at home, and you should definitely do that.
Okay.
All right.
How about my kids? How
What,
about my kids? Would you have something to say? Oh, well, that you did. You did.
Yeah.
And
about the gifting.
I don't know how they use their monies, but oh boy.
Yeah, I mean, I think that, I wouldn't gift them, anything unless you're right first. In other words, I believe God calls us, as Paul tells Timothy, that, we need to take care of those under our roof. In your case, that's you. And, we need to make sure that you are taken care of. I believe God would want that. And remember, as you save this money, you're going to have opportunities to give it to them at some point in time. But if you don't get to gift it to them, that someday when the Lord calls you home, then they'll get that money. So I wouldn't be overly anxious to gift them anything, until I would want to make sure that your savings is in a good place before you start doing a lot of gifting. But I'm okay with you doing that eventually. But I think you've got to make sure that you've got a real sound savings account, just in a savings account at the bank, a money market account or something like that, plus some savings at home, I think is what you need to be your ultimate goal. There'll be plenty of time for that gifting. Thank you, Marianne. I sure appreciate the call. Let me go to Melvin. Melvin calling us from Texas. Hey, Melvin.
How you doing, Mr. Dan?
Yes, sir.
Okay, I listen to your show a lot. I'm 24.
Mm-hmm.
I signed up for a TD Ameritrade account.
Okay.
I haven't take $25 out of my checking account and transfer to my TD Ameritrade account every 2 weeks.
Mm-hmm.
And I'm wondering, should I let that build up or start trying to buy shares?
Well, it's great, Melvin, that you're doing that. That is awesome, because that is really going to be good for you, because you're, number one is you're learning that discipline of that money going out automatically, which is wonderful. And I would let it build up a little bit. Let's wait until it builds up, a little bit, and then maybe next year sometime, move it into a mutual fund. And I would probably suggest like a Timothy growth fund, a large cap, mid cap growth fund. And then that $25 a week, pay every other week, $25 going into that growth fund. And that is a great way to begin to grow a retirement account, because you're buying into a mutual fund and you're buying in at share prices that are different every time you buy it in. So your average share price is going to be a good one, and it's going to really help that account grow. And you'll be amazed, if you're just patient, just doing that at your age, how much money you'll have someday when you retire. You'll be amazed. So I think you're doing the right thing, Melvin. I wouldn't change anything. Let's wait until, February, March, and then maybe move that money into a growth fund like a Timothy Growth Fund, and then continue to put in every month. The other thing I would say, as let's say you're at a job where in January you get a pay raise, and let's say your pay raise is 3%. Then try to take half of that, maybe 1.5%, and add that to the $25 and increase it by that percentage. So you'll see a little bit more income into your paycheck, and that's good. And you'll be saving a little bit more. And if you get in the habit of doing that, as you either change jobs or begin to make more money, that's a wonderful thing to do. So I think you're on the right track. You're doing all the right things. But let's just hang in there. We got a lot of uncertainty going, and let's wait and see what the end of the year brings, Melvin. But just keep doing what you're doing. That's great stuff.
Okay.
All right. Thanks, Melvin. You'll call me back, and we'll figure out what to do when we start getting in to invest in it. All right. Let me go to Pat from Virginia. Hey, Pat.
Hey, how you doing, Dan?
Good, Pat.
I have two quick questions.
Okay.
The first one is I have a 401 through my work, but they do not do money market.
Okay.
But they do have the Wells Fargo short-term mutual fund.
Mm-hmm.
And so should I put it in there? And then the second question is, my husband just recently lost his job, and he's 59 and a half. Now, could he take partial retirement? And if he does, how would that affect him when he turns 65?
Partial retirement from his 401k, you mean?
Yes, sir.
Yeah. So, yeah, certainly he can do that anytime after 59 and a half. He can start making withdrawals on a regular basis to supplement his income. The only impact that it's going to have on him is, he's young. He's 59 and a half. So he's got a lot of years, in which to draw money from this to supplement his income. Now, if he does it between now and 65, when he starts receiving Social Security, then he can stop doing it. But remember, if he's doing it now and the market comes down and the account goes down just because of the market, and then he is withdrawing when it's down, it really puts the account in a bad place, and it's harder to recover from that. So, always you have to think about outliving your money. So obviously, the earlier you start withdrawing it, you increase your odds of outliving it. And that's the concern. That should always be the concern. So if he has to do it, he has to do it. Withdraw as little as he possibly can, and he will be taxed on that withdrawal, but he won't be penalized because he's over 59 and a half. As far as the short-term bond fund, that's the place to be. I'd have it in that short-term bond fund. That's the best they offer, and I'm okay with you doing that. I think that makes sense. Financial Issues, I'm Dan Celia, 866-300-9298. We'll be right back. Hi, this is Dan Celia from Financial Issues. Like every ministry, we need to raise support to continue in the work that the Lord has for us to do. One of the ways that we do that is we ask you to help support the ministry by becoming a partner with us in the ministry. What you get for that partnership is access to our investment strategies. You'll get access to our asset allocation models, my stock picks that come out every Monday, our email alerts that may tell you when to buy or sell, or maybe give you comfort during a volatile time. It is an incredible value for $85 a year, and you get to support the ministry. It sure would be a blessing to us. Would you consider supporting Financial Issues and be a partner? Go to financialissues.org, financialissues.org to support the ministry. I sure would appreciate it.
The opinions and recommendations expressed by Dan are his own and do not necessarily represent the opinions of this station or any of the show's sponsors.
Welcome back, Financial Issues. I'm Dan Celia, 866-300-9298, 866-300-9298. If you want to call in, we're going to try to get to as many calls as we can here. Last segment. We are live today. I sure appreciate all of you being with us. I trust that while I was on vacation, the programming that I know Devin spent an awful lot of time trying to put together some great programming that would be edifying to you, and I'm sure it was. I got a lot of comments, so thank you for that. Let me go to Debbie. Debbie's calling us from Illinois. Hi, Debbie.
Good morning, Dan. I'm a partner.
Thank you.
And I have some questions. My father passed away in April, and I inherited some equities, 700 shares of AT&T, 1,400, and actually the total amount is going to be about 1,600 shares of ExxonMobil, 332 shares of Pfizer, and 300 Verizon Communications.
Mm-hmm.
What do you think about those?
Well,
should I get out of the AT&T and the Pfizer and the Verizon, or hold on to them?
Well, Debbie, I think the question is, if you want to really try to concentrate on being biblically responsible, then yes, get out of those. I think from a valuation standpoint, obviously, they have gone down, in value. All of those have, including the ExxonMobil. And when you hold on to those, so I don't know where they were. How long ago did your dad pass?
In April.
Okay, so for instance, those stocks were valued higher in April than they are today. So they would, you would have a loss, and you can declare $3,000 a year in your taxes for those losses. So that might help you out a little bit from a tax standpoint. But that's not the reason, to get rid of them. I certainly would keep the ExxonMobil, but, if you want to be biblically responsible, then you really have no choice but to get rid of those.
Okay. Also, there are bonds that some are relatively short-term, some are long-term. There's a Bank of America that comes due in November. There's an HSBC Financial that also comes due in November. J.P. Morgan Chase comes due in January. There's a Goldman Sachs that comes due in February, a Ford Motor Credit that doesn't come due until 2018, and a Dow Chemical that comes due in 2020. And I know that none of those are on your biblically correct lists, but
I would keep I would keep those, Debbie. I'm not a believer in selling individual bonds. I believe that you should hold bonds till maturity. Right now, some of those probably have a value that is down below what your father paid for them. So the only way you take a loss on that is if you sell them and they're down. If you hold them to maturity, you're going to get your principal back, what was put into those. And they're all paying much better income than would, a money market account or a CD. So I would hang on to those and let them mature. The only one that I would say is the 2020 bond. Do you know what the payout is on that? You know what the interest rate is? It should be right on your statement. When it gives a description of the bond, it should have a percentage there. Do you see that?
2.25%.
2.25%, yeah.
2.25%.
Yeah, so, that's probably down as well. Might not be. That would be the only one that I would probably say it would be okay to sell. It is making 2.25%, but, if you don't sell it now, then you got to commit to keeping it for 2020 because obviously until it reaches maturity, it's going to continue to go down in value because if the Fed raises interest rates, that's the one that's going to be impacted the most. But all in all, I would keep them. Are you receiving the income? Are you actually receiving the income from those?
Yes.
Yeah.
Yes.
Yeah, it's another reason why I'd
Being
keep.
put into a money market account.
Yeah, that's good. Yeah. No, I would keep them. I wouldn't change anything on that, Debbie.
Okay. Thank you very much.
You're welcome. Thank you for the call. Let me go to Joel in Oklahoma. Hi, Joel.
Yes, sir, Dan. Hey, appreciate your show. Real quick, I've got I have a small farming and ranching business that I'm not dependent upon for income, but I'm thinking about adding some equipment to my operation this year, and I'm just kind of wondering what happens if there is a severe economic downturn towards the end of the year, as far as purchasing ability and whatnot, and whether it would be a good idea to go ahead and buy something now and just hope for the best, or wait till there's possibly some deals out there. And then the other flip side of that coin is, if there's some deals out there in an economic downturn, will the money, the purchasing power that I have with cash still be as good?
Yeah,
I'm just kind of.
Yeah, that's a great question, Joel. I think that the purchasing power won't be an issue by the end of the year. I think their deals could be better by the end of the year, for certain. The question is, so here's the question that is going to be of concern to whoever you're purchasing them from. Your ability to pay for those is coming from what? And I'm just going to assume it's coming from your regular job, your day-to-day activities. And if that's the case, then you shouldn't have any problem, and it may be pay you to wait. If we have a severe economic downturn, and part of the way that you're going to pay for this equipment is from the operation itself, then the operation itself could suffer. And if that happens, and you know more about that operation than certainly I do, but if that happens, then of course, what the equipment manufacturers or the financing, if you're financing it, is going to look at is your ability to pay upon that. So it's a kind of a double whammy. You get a better deal if you wait. But if you wait and the economy turns down, you can't get the money to purchase it. You know what I mean?
Correct.
So go ahead.
I mean, I've got cash money to pay for stuff, but I probably don't want to turn loose of, say, all of it.
Right.
I like to have that reserve, like you've talked about. So I'd probably finance a little bit, but I've also got viable assets. Well, I've got calves and cows walking around that you could sell, but like you said, they're not going to be worth as much when you go to get rid of them either. So
right. Yeah, I mean, if you've got cash, not to purchase the whole thing, but I don't know. I mean, so I believe that deals could get better. I think that I would try to go in now, though, because they're hurting now too, and try to negotiate a really good deal and get the best possible price you can get. And I think you're going to get a good price. And I would probably elect to do it now rather than later. I think it might make more sense. And if you're in that situation where you have the cash or a significant down payment, I'll say, then I think you ought to probably do it now and try to negotiate the deal for what you might expect things to be come December. And I think that you'll probably get a pretty good deal on it. So I'd probably move now.
Okay. I appreciate it, sir. Thank you.
All right, Joel. Take care. Let me go to Leroy in North Carolina. Hey, Leroy.
Yes.
Yes, sir.
Yes, sir. I have some questions. I'm a 86-year-old man. I have approximately $450,000 in investments. My wife has equivalent the same thing. My problem is I don't know what to do. We're getting where we'll probably wind up in a nursing home. You talk about cash. I have about $80,000 in the bank in the money market. Kind of is what I consider cash to get a hold of. What do you recommend? 3/4 of this, 2/3 rather, is in money market with Vanguard.
Mm-hmm.
Other things are in different investments.
Mm-hmm. I'll tell you, Leroy, if you get 2/3 of that into a money market at Vanguard, I wouldn't change anything. I think that here's what I would, what one of my concerns would be. My concern would be that you're going to need this money to generate, maybe, hopefully the Lord will return, or it won't be necessary for you to go into any kind of nursing facility. But if you are, what you're going to need that money, obviously, to draw some of the principal. And at that point, think about generating some income in order to pay for the nursing care. You don't want to leave it for, you want to be able to enter those kinds of situations by being a private pay person, and you have the ability to do that. So you want to make sure that you don't expose, which you're not, too much of it to the markets, where it could dramatically decrease and make those chances of private pay a little bit harder for a significant period of time. So I think the best thing you could do is leave things where they are for now. But I think if we have this downturn in the next 6 months, and we start to see some stability coming into the markets, not necessarily the economy yet, but the markets, then I think it may be a good idea to go back into some income-producing kinds of investments that you should be able to generate enough interest, income, and dividends to be able to pay for any care that you might need. And that would be my goal for you, to be able to do that.
Can I ask you a question, please?
Sure.
You use the expression home cash.
Yes.
I have a lockbox at the bank. However, I mean, what do you mean by home cash? Cash at home, rather.
Yes. I mean money at home. Because here's my thinking on that. I'm not saying this is going to happen, but I'm saying it could. And it could happen where we get in a severe crisis in the economy and the markets. If we do, there's going to be a run on the banks. People are going to panic because of what we have seen happen around the world. And if that happens, the banks are going to shut down. Not permanently, maybe only for 2 to 4 weeks, but they're going to stop. They're going to shut down. Credit cards won't be accepted. ATM cards won't be able to be used. They're going to shut down because they're going to want to get everybody's mind settled down before they allow this just run on the bank. And if that happens, I want people to have some money at home to be able to, put gas in a car to get to an emergency room, to be able to buy some essentials that you might need to buy, and you're going to need cash to do that. So I think it would be good to have, a few $1,000s at home, because if the bank's closed, you're not going to get to the lockbox either, at the bank, because the doors are going to be locked. You're not going to be able to get in for even that. So I would suggest that you have a little bit at home. That's what I mean by some cash at home. And I'm
a new listener, so
okay.
You fascinate me, and I really appreciate your advice.
So if it doesn't happen, nothing lost. If we don't have that crisis, it's okay. You've got a little cash at home. You can then put it back into your savings or in the bank. But I think that it's just good, prudent wisdom to kind of have some at home right now.
I see. Well, I certainly appreciate, as I say, I'm a new listener. I think you're wonderful. God blesses you. And,
Thank you.
Thanks for your time.
Thank you, Leroy, for those kind words. I sure do appreciate it. And it is a blessing for me to be here as God continues to shed his grace on me in this ministry, and I'm so grateful. It is certainly not by my own power, and I'm so grateful to that. And we will continue to do that as long as the Lord allows it. That is for certain. Sure do appreciate it. Folks, we'll be back tomorrow. Tomorrow's Friday, right? So Friday is Rapid Fire Friday. We will move quicker. We're going to ask you to keep your questions short and to the point. We're going to answer them as quickly as we possibly can. Folks, remember, all that you have is His. It's all the Lord's. We will stand before Him someday. Let's stand before Him and be found a good and faithful steward. Have a great day. God bless.
If we ever forget that we're one nation under God, then we will be a nation gone under.